Hello, everybody. Welcome to today's episode of The Daily Dose. Today is Monday, October 17th, and we saw stocks really surge today quite heavily. The S&P 500 was up 2.65%, the NASDAQ was up 3.43%, and the Dow Jones was up 1.86%. So the bank earnings results have been good so far, even though a lot of them are coming in this week, and I think that's gotten the market a little bit ahead of itself as far as this earnings season goes, expecting it to be really good. And I think that can be a little bit dangerous going into a big week this week and then a make or break week, in my opinion, next week. Because if the market gets these expectations super high and prices in the market go up and the big tech earnings are not good, or a couple of them miss, it's going to really tank the market. And I think it's way too early to be getting ahead of yourself as far as expecting good earnings, because we really don't know what to expect out of big tech, which will be the earnings that'll actually move the market. So I want to take a look at the S&P 500 chart. So we're creating some chop now in this zone, which we know has been critical from the last time we came down to it. And now that we're really creating structure in this zone, whichever way it breaks to is going to be significant, in my opinion. If we end up breaking above, it's going to leave behind a lot of structure, and that'll be a big support when we come back down to it. Now that it's held 1, 2, even 3 times coming down, and that would be a big support, and a lot of buyers would be coming back into there given the chance. On the flip side, if we break below this zone, we've come back down to it once, twice, where we built up this structure, and then 3 times where we built up this structure. And if we break all the way through, that's going to be significant to the downside. So that'll be a big resistance when we come back up to it. So I do think that this structure that we're creating here is important. And we might get a big move either way when we break through this zone. Because the market will have made up its mind on the direction it wants to go from here at that point in time. I actually need to adjust my channel line. Didn't even notice that was just a little bit off. Let me make sure that it's good. Yeah, I can actually go back up a little bit. Sorry about that. So a lot of structure here. That's what I'm looking at on the S&P 500. Obviously, earnings will move the market a lot. This week's mostly just banks, and next week we do have some big tech. So I think that those will be critical in what we see happen from here. And then for Bitcoin, so we did expect to kind of stay flat and go through this trend line. And then if we saw selling, we expected to come back down. We did not see selling today in the stock market, and Bitcoin actually held up. It didn't go up as much as the stock market, which I found really interesting. Usually when the market's up big, especially the NASDAQ today, it was up over 3%, almost 3.5%. You'll typically see Bitcoin at least match the NASDAQ, if not be up like 5 to 6% on a day like today. So it's not insignificant that it's staying above this zone we have from like 19,000 to 17,700. And it's not insignificant that it is on the other side of this trend line right now, which has held it down for almost a full year now. But it's not showing as much strength as we would like to see if this trend line was truly being broken. So that is interesting. If this trend line was actually getting broken through and we were seeing all this bullish momentum in the stock market, Bitcoin would be up a lot more than 1.8% on the day. So I think we have to be careful that maybe if tomorrow or the middle of the week or the rest of this week isn't good on the stock market, that this could easily come back down to like, it would be somewhere in the 18,000s, I guess. And then we'd be putting pressure on that 17,000 level, which is critical before we go into free fall on Bitcoin. So that's what I'm looking at. It looks strong technically when you just look at it like this, but when you actually dive into it and you see that it was up less than the market today, and that it's not really showing a ton of bullish strength following this break, then it becomes a little bit more concerning. But obviously, it's just we'll have to wait and see what Bitcoin ends up doing. It's been flat for like 4 months now, so I'm not convinced that it's breaking to the upside here. Not convinced. So that's what I'm looking at on the stock market. We did expect to see some selling where we closed today on the S&P 500. So we're kind of sitting at the top of this zone where there's been resistance in the past. And it'll be interesting to see where it goes from here. Again, if any earnings disappoint, any major earnings disappoint, it'll probably have a big effect on this market, because any disappointment as far as earnings go now will send this low, because the markets are now setting expectations high because the first couple earnings results from these banks have been good. And when the expectations are high, anything that disappoints, especially in this environment, will send it lower. We're in a huge downtrend. Anything that gives it more juice is going to keep pushing it down. In this environment, that's what will happen. So if you haven't listened to this weekend's episode of the Weekly Wrap, definitely make sure and go do that. It was a really good episode where I kind of break down how to be a good investor through a recession. So that's definitely relevant to right now. I definitely encourage you to go ahead and take a look at that episode. And if you like this type of content, I create one of these videos every day that the market is open, and I create one of those weekly episodes every weekend. Subscribe to us on YouTube and follow wherever you listen to podcasts. That's all I have today. So thank you for watching or listening to this episode. And until next time, I will see you in the next one.